Yeah, Romaine, that was third quarter data we got this morning. The most recent data, that was then, this is now, from October and November. At least the anecdotal reports are that growth is slowing. According to the Beige Book, just out from the Federal Reserve, on balance, economic activity slowed since the previous report. 4 districts report modest growth, 2 indicate conditions were flat to slightly down, and 6 noting slight declines in activity. Retail sales, including autos, remained mixed, it says. Demand for labor continues to ease, according to the Beige Book, as most districts report flat to modest increases in overall employment. There are more people available, more applicants to take jobs, and several districts noted that retention improved as well. But, and here's something we have not seen before, reductions in headcounts through layoffs or attrition were reported, and some employers felt comfortable letting go low performers. That's definitely a change in the way the labor market is being portrayed. And finally, prices increases are largely moderating across districts, though they remain elevated.
I am curious. I know we sort of dismiss sometimes some of the stuff in the Beige Book, that it's very anecdotal, it's very backwards looking, but this is the last Beige Book where I believe we're going to get this year. And I'm curious as to whether this changes at all or could potentially change the conversation when they head into that meeting in a couple of weeks.
Probably not, because basically this is ratifying what we've heard from the Fed officials today. And you look at the speeches from Tom Barkin and from Raphael Bostic, even Loretta Mester, they're talking about what they're hearing from officials in their district, from CEOs in their districts, and that's matching up with what's coming in the national summary here, that the economy is slowing, not a recession, but things are slowing down and price increases are moderating.
I want to talk a little bit about what we learned about the consumer in this report. Consumers showed more price sensitivity, according to the Beige Book. Also, that consumer spending on discretionary items declined. And this is interesting because in addition to the very strong labor market, we keep talking about how the consumer is miserable, but they're still spending. Maybe a little bit of a trend shift here as well.
Well, even in the third quarter numbers that we got this morning in GDP, it showed a lower than previously reported consumer spending level. So it is possible that consumers are slowing down and the overall economy seems to be slowing down. The question is, how slow is slow? 3.4% was the third quarter GDP consumer spending number. That's still very strong. We have to see how the holiday season turns out. The Beige Book is looking at data up through November 17th, so it's not even in the week of Black Friday. And I'm sure, Katie, you were out busily snapping up deals.
I was actually here with Romaine talking about it.
It was glorious.
It was a lot of fun.
I'm sure it was a lot of fun. But we'll find out whether consumers are still wanting to spend or not as the next weeks go along.